Mark, these are numbers that at first blush look pretty strong, and certainly your guidance feels pretty strong as well. What is the market not getting about the GXO story?
I think your point about high growth is well made. I think even on a second blush, these numbers are very strong indeed, Guy. The reality is that we've entered a period, or exited a period rather, over the last 6 months, where everyone's been indiscriminately selling everything. And what I think is going to happen over the next 6 months, testament to what we were saying on our conference call this morning, is that we're going to get some discrimination between the good and the bads that we've just heard about. I think we're going to get a period here where people start to focus on brands with pricing power, people who can pass on inflation, and there is going to be an element of differentiation now that takes place. So the market will do whatever the market will do on a day-to-day basis, but we're very focused on the fact that we've just done 19% organic revenue growth. We've got a $2.5 billion pipeline, and we're growing EPS this year by 29 to 39%. I've got customers falling over themselves wanting to do business with us, and I wake up every morning feeling like I'm holding onto the tail of a tiger, quite frankly. So times are good.
Mark, it's Kriti in New York. Let's talk about some of the challenges of the future. When we're talking about exports, a lot of concerns coming around China right now, the COVID lockdowns there, but also can the exports leave China? Can the exports leave Germany? A lot of those pre-war supply chain issues and inflation issues, they're going to stick around. What does that mean for logistics broadly?
I think there are lots of problems out there, Kriti, and you and Guy and I have spoken about this a lot. The reality is, if you look at the world right now, about a fifth of the world's container ships are under some form of berth sitting outside a port. So there's a lot of bottlenecks out there. If you look specifically on your point of Asia, I mean, if you look at Shanghai specifically, we've got around 344 container ships stuck outside the port of Shanghai. These bottlenecks are not going away anytime soon, particularly with the zero COVID policies and what's happening, of course, in the air freight market over Russia. There are going to be constraints in this market for a while. And really, the theme that's going to prevalate here, I think, over the next 12 to 24 months is what you're going to see is that people are going to continually nearshore. They're going to make decisions where they put their warehouses. It's going to be less Asia, more in the West. That requires a decision-making process. And those are kind of the calls that I'm getting at the moment. Customers are coming to us saying, I want to be closer to our end consumer, but be very clear. Supply chains are going to be a theme for the next 12 to 24 months. The problems aren't going away anytime soon.
Mark, can we just talk a little bit about what the consumer is doing right now? You are in the e-commerce business, and I'm wondering what you're getting back from customers. I'm not asking for specifics here, but I'm asking for generalities. Today, we are seeing the e-commerce giants getting hit and hit hard on the S&P. Etsy's one of the biggest decliners out there. Wayfair also down pretty big. Here in the UK, Boohoo down. Zalando in Germany also over the last 24 hours taking a very big hit. What are you seeing in that kind of fast fashion e-commerce market right now? The stocks have held up reasonably well thus far. What do you see in these businesses?
If I look across the entire consumer and industrial space that touches e-com for us, I'm seeing strength, but I am also seeing in parts a bit of softness in some of the areas such as automotive, which is less e-commerce focused. But particularly if you look at consumer, fashion, very strong indeed, to your point, Guy. I think overall what surprised me is the consistency of, despite the fact that we've had this shift from, as you said earlier, with Ratika's comments, from e-com into brick and mortar retail, the reality is that both e-com and brick and mortar retail have remained resilient through the first quarter. That's really underpinned that 19% organic growth that I've talked about. I think there is a bit of a differentiation here in terms of the haves and the have-nots, and I think that's going to be a bit of a barbell into the second half of the year. But consumer elements like fashion remain strong. Places like the industrials, a little bit softer, but overall, across my portfolio, I'm seeing strength when it comes to consumption.
Well, those consumer sectors that you just mentioned, fashion, for example, those supply chains extend into Asia. You mentioned earlier the concept of nearshoring those supply chains. I'm curious about your forecast for perhaps countries like in Latin America, for example, moving production from China to Mexico when it comes to American consumption. What are your thoughts?
There's a lot of demand, as you know, for warehousing in Mexico right now. It's the right place at the right time with the right currency. We're seeing also huge demand for shifting back towards the US market for warehousing. We're also seeing strong demand on the continent as well. And this is really one of the reasons we're seeing wage inflation. If you look at the piece across the European and US market, wage inflation is tracking at the moment across our business anywhere between mid to high single digits in the US and low to mid single digits across the continent in Europe. But there is huge demand for warehousing. Prologis mentioned it obviously on their call a couple of weeks ago. That's not a theme that's going to change anytime soon. Mexico, US, continental Europe is seeing strong demand for warehousing.
Mark, let me talk about our question of the day and slightly rephrase it. Which aspect of the economy should the market be focusing on right now? Inflation or growth?
I love it how you always ask me to play market strategist. It's very kind of you, Guy. I think it goes back to this idea of the fact that Wall Street has benefited from inflation, asset inflation specifically, for the last 10 years. And we've all become accustomed, particularly market strategists who are wet between their ears. They're basically seeing a lot of things that point them towards buying utilities and buying dividends. And therefore, there's this obsession with the fact that there's a shift from Wall Street inflation now to Main Street inflation. The fact that I said to you that wages have been going up for the last 12 months. And Wall Street's a bit flummoxed about what to do with this. They don't quite understand what to do. What it means for me is that you're going to see winners in the brand space that can pass on pricing to their end consumers in the second half of the year. Those are the stocks that do well. Businesses such as mine, where there's an inflation pass-through, and businesses that have underlying growth stories that go beyond COVID. My total addressable market is $430 billion. I've got tons of growth ahead. That's the differentiation that we're going to see here. And inflation is going to play a narrative behind that. Guessing about a recession in the second half, I still think is the great unknown, but inflation is here and now, and that's something that you can invest behind.
Mark, I want to talk about the currency story with you. In a past life, I believe you were a market strategist, so we're going to put that hat on for a moment. When we're talking about the Federal Reserve here, you're also seeing some pretty extreme dollar strength, weakness in the rest of the world. You hit on the currency picture for Mexico. I'm curious about the implications of that dollar strength on the supply chain business.
I think it's fascinating what you say about the way that the supply chains are changing in regards to currency. There seems to be this tug of war going on from everything from the Federal Reserve all the way through to the Bank of Japan about how they want to play the interest rate cycle and how much you want to forgive on your currency. I don't see that changing anytime soon, and I think it definitely drives warehouse decision-making. I think it drives employee decision-making as well for this business. But it seems like that dollar strength is going to continue from here on out.
Where are you seeing supply chain issues, Mark? I've been to some of your facilities, you use robots, you use a lot of robots, and increasingly you're going to use more of them. Talk to me about how that side of the business is evolving as we see this tight labor market.
I think you've hit on it with that last point, which is labor availability has been the big issue for businesses such as ours. And the way that we've combated that and dealt so well with it over the last 12 months, we've got 300 HR executives poring over every single one of the business parks that we operate in across the US market. So it's really being about granular detail here, Guy, making sure that you know exactly what the fair competitive wage is within the various business parks across the US. So we've really focused on that detail. But I also feel that there's an element here of making sure that there is softer pay and play, making sure that you're looking after your employees in the downtime sessions, lunches, dinners, making sure that you're giving them proper career prospects. That's what we really focus on in this business. And I think that that's going to be a big theme. We're going to see a differentiation here between companies that have really got their HR fingers on the pulse and companies that don't. And I think that that's going to be a theme over the next 12 months.